What's the secret to winning in the stock market? Studies clearly prove it is not market timing. That's a way to get burned. Smart investors know that dividend investing, especially in companies that grow their dividends every year, has one of the best track records in market history. Just ask Warren Buffett. The Black Diamond Dividend strategy through IQ Wealth Management in Scottsdale is the logical and prudent way to invest for strong compounding growth over time with less hassle. If you live in Phoenix and are looking for a more dynamic and prudent approach to investments, learn more about the Black Diamond. Let's listen in on leading financial advisor Steve Jurich of IQ Wealth Management talk about the power of dividends in a recent broadcast of the popular daily radio show Mastering Money on Money Radio. At any point throughout, you can visit our website by clicking the little circle with the eye in the top right corner.
When it's time to get serious about planning your retirement, talk to the guy that wrote the book on it. Read Steve's book, Smart is the New Rich, the Amazon bestseller, available in Kindle and paperback. Plan, invest, insure, retire, and stay retired. Now back to the A-Team on Money Radio.
I think so. And welcome back to Mastering Money. We come to you Monday through Friday from 8 a.m. to 9 a.m. and from 6 p.m. to 7 p.m. That's a brand new time right here on Money Radio. We're always looking for ways to make you a high information investor. Send me an email if you like, steve@iqwealth.com. I am Steve Jur-itch. Thanks for joining us. If you missed any part of the show today or any show on any day, you can download the free Mastering Money app for both Android and Apple devices, also on iTunes, or you can go to masteringmoneyradio.com. Pick any show you want, any time you want. James, can we get a quick update?
Yeah, the Dow's down 91 points at 20,560. The S&P 500's dropped 11 at 2341, and the Nasdaq's down 35 at 5831. Steve?
Typically, large companies are among the most reliable dividend payers. These are classified as, of course, large cap stocks, which generally have market capitalizations of $10 billion and above. Small companies tend not to pay dividends because they're more focused on growth. They need to roll every dollar of profit they make back into the company. That said, there are a number of small cap stocks that do pay dividends. For example, water utility company American States Water is one example. Don't go out and buy it. It's a small cap with a market capitalization of $1.6 billion, and it has increased its dividend for the past 62 consecutive years. It's not necessarily a bargain right now, and it's not in the Black Diamond Dividend portfolio, but it's an example of a smaller stock that does pay consistent dividends. Now, dividend yields can vary. Companies don't declare dividend yields. They declare the number of dollars or cents they will pay monthly, quarterly, or annually. Yeah, there are some stocks that pay monthly dividends. The yield is determined by dividing the actual dividend by the share price. So when the share price goes up, the dividend expressed as a percentage of the share price goes down. When the share price falls and the dividend being paid remains the same, the dividend yield rises. It's a calculation, not a declaration. Dividend yields are all over the map and can be very helpful in determining the overall financial health of a company in relation to its stock price. Investors can find dividend stocks that yield below 1% on one side of the scale, all the way to double digits in some cases. If you see a 25% yield out there, look out. High dividend yields are enticing, but investors need to perform their due diligence before buying to ensure that the payouts are sustainable. An extremely high dividend yield of 10% or more can often be a sign of upcoming danger or really some financial issues currently at the company that you won't like. Such a huge yield indicates that the market doubts the company's financial position. Remember, it's not a yield being declared by the company. It's a result of the calculation that something is probably wrong when you see that dividend yield that high. Quality and reliability is what you're investing in. Otherwise, you're just speculating and rummaging through garbage. Now, just because a stock pays a dividend does not necessarily mean it is automatically a better investment than a stock that pays no dividend, especially in the short run of, say, 1 to 8 quarters. Don't expect a company like Snap, a recent IPO, to ever pay dividend to shareholders. That said, there are more bad reasons than good for not paying dividends. It's tough for management sometimes. Committing to increasing dividends pushes a company's management to be more responsible with its cash flow. That means those stocks probably are better run. Those companies can be better run. Many companies, particularly in the tech sector, heavily favor share buybacks over dividends. Nothing wrong inherently with it, provided the companies conduct share repurchases in the proper manner. Sometimes they just issue bonds at 2% and turn around and buy their shares. That's kind of something you have to watch for. Share buybacks can help a company increase its earnings per share. When a company uses some of its excess cash flow to repurchase its own shares, well, now there are fewer shares outstanding. The company suddenly looks a lot better on paper, and computerized trading models then flash a buy signal for it. It can work for a while until it doesn't. Dividends are different. You can't fake cash. It has an unmistakable sound and feel to it. Management may not want to be obligated to pay a steady increasing dividend, especially when the economy enters a downturn. However, there's a solid statistical body of evidence that indicates dividend payers and growers have significantly outperformed non-dividend payers over time, with a lower level of risk as well.
And if you're like most people planning retirement, there are three things that really matter to you: preserving your capital, growing your principal, and having enough stress-free income from now on so that you never run out of money. And if you fail in just one of those areas, it could be a disaster. But many people are actually at risk of failing in two of those areas. But it can be prevented with proper planning. The best place to start is with guaranteed income equal to all your expenses. The more guaranteed income you have, the better you'll feel, and the better your spouse will feel. It's called financial security. Investments do matter, but investment products should serve and fit the strategy, not drive the strategy, as that other guy is trying to say at this moment, too. So call to schedule your free retirement readiness review with Steve. There's no charge to meet. Call his scheduling team today, 480-902-3333, and visit IQWealth.com. Make that smart call to IQ Wealth right now.
Hey, have a great day, everybody. See you next time.
Roll out of bed, Mr. Coffee's dead. The morning's looking bright. Your shrink ran off to Europe, and he didn't even write. And your husband wants to be a girl. Be glad there's one place in the world where everybody knows your name, and they're always glad you came. You wanna go where people know people are all the same. You wanna go where everybody knows your name.
You've been listening to another edition of Mastering Money with best-selling author and retirement strategist Steve Jurich. To talk with Steve about mastering your retirement, call IQ Wealth right now at 480-902-3333 and visit IQWealth.com.
Copyright 2014 through 2017 by IQ Wealth Media. All rights reserved. Reproduction is prohibited. Investment advisory services by IQ Wealth Management, a registered investment advisor. All information presented on Mastering Money is general in nature. No specific tax, investment, or legal advice is being given. Always consult with a legal or tax advisor before taking any action. Listening to Mastering Money does not begin a professional relationship. Steve and his guests can only make investment recommendations after a personal review to determine your risk tolerance, goals, and time horizon. Insurance services provided by IQ Wealth Management Insurance Division. Guarantees rely on the financial strength of the issuing insurer. Annuities are financial vehicles designed for long-term income preservation in retirement and are best when used along with growth investments and cash positions. They are not FDIC insured, and surrender charges may apply for a period of time. Income rider values are not cash values. Some guests may pay for airtime on Mastering Money, and Steve may hold positions in some assets mentioned. Therefore, he may be biased in his views. Thank you again for listening to Mastering Money. I'm producer James Tidwell. To meet with Steve personally, please call his scheduling team at 480-902-3333. Stay safe and invest well. See you next time.
To learn more about the Black Diamond Dividend strategy or to hear the rest of the show, click the link right now and see the IQ Wealth Management website. Learn more right now about why dividends have one of the best track records in market history. Click the link now to retire and stay retired.